So today I want to talk to you about what are three smart ways that you could start investing into your 40s. The first I would tell you is what are you doing now? For real. What are you doing? Are you doing anything? Have you just continued to live paycheck to paycheck and you feel like I just stuck, I can't get any momentum? The good news is most loans today require very little down payment for you to purchase your first house, for instance. If you've got good credit, it's easier because usually there's less down payment requirement. But FHA, for instance, only requires a 3.5% for a down payment, and your score can be as low as a 580. So for you to hold back and hear all these other podcast talkers with real estate telling you that you need 20% to put down to buy a home, that's just inaccurate today. That's not necessary. Many times I could have put more money down, but I still opted to take the FHA loan because I knew that was less money for me up front. And I was going to use some of the other proceeds maybe to do some improvements, for instance, to the house. So there's a lot of ways that you can get into a home without just thinking of it as a 20% investment. The other thing you're going to hear a lot of is what about PMI if I don't put 20% down? That is correct. You are going to have some private mortgage insurance because the lenders are at risk with the lower down payment. However, if your house appreciates and becomes 78 to 80% in equity position within a matter of a couple of years, you can request to have that PMI taken off. So it doesn't have to be a forever situation for you to have the private mortgage insurance. So that's one way. Other way, I'd look at what are you doing now? Are you investing in a 401k? What kind of return are you getting on the 401k? Would it be smart to maybe pull some from the 401k and use that as a down payment? Is there any way that you may have family members, you may be getting married? There's lots of ways for you to accumulate that cash to use as a down payment. So look at your 401k, try to figure out if you were to withdraw from it, would you take a loan, which is what I would recommend. And the reason for that is that you can, through your payroll, be paying back that loan. But in the meantime, if you pulled that money and you used it and you went and bought a home and that home is going to appreciate for you, that's the goal is that you don't have to own 500 properties over a period of a decade. If you can purchase 3 to 4 houses, let other people pay them off for you is the goal and the strategy, then get in there and buy that first one because that one is the one that you're going to start this whole journey off of. And so that would be the second one would be do you have assets that again you can pull from? And the third thing is to look at what's your budget look like for real. A lot of you I know for sure you're out there, you're spending money that you either don't have or is spending it with ways that you know are not beneficial. And I'm in an area to where the second one is more true. I see a lot of waste with people using Instacart or all these services per month that if you were to cut those out and you were to really get honest with yourself and you were to turn that money into a money making opportunity rather than a money costing opportunity, you're going to see way more momentum. And the reason I think that people overspend or they don't really consider themselves as financial responsible as they should be is because they don't have a goal. If you don't have a goal, then what are you going to be thinking about when it comes to money? Probably like everyone else, just spend it, make it, spend it, make it. And so my goal is to cut you out of all of that and to get you back to the basics of where is the money going and stop spending it. Let's talk about that and let's get you in the mindset of How am I spending money? What's it going towards? What is it going to do for me in the future? For a fact that you are blowing money, and you need to rethink that because this is about getting you financially savvy and getting you where you're more disciplined and that money is going towards something that will benefit you in the future. Those three things think about. Low down payment will get you into a house. And the second is, what are you doing now? Can you pull from some of your other retirements that you may not even benefit from for another 25 years and go buy property? And then third, what are you doing with your money today? Are you really using it the way that you should with your future in mind? So that's it.